Today, we're going to decode a kind of hidden language, bearish candlestick patterns. Look, we're not just staring at charts here. We're learning to read the actual story the market is telling us, one candle at a time. It's all about figuring out who's winning the fight for control. At first glance, a financial chart can just look like a total jumble of green and red bars, right? But what if I told you it's actually a dramatic story, a play-by-play of a really powerful struggle? The secret is just knowing how to read the language. At the heart of every single chart, there's this core conflict. Every candle, every pattern you see, it represents a battle between two forces. You've got the buyers who are pushing the price up, and then you've got the sellers trying to force it right back down. Our job is to learn how to spot who's winning that fight. So to do that, we're going to break this story down. First up, we'll meet the main characters. Then we'll dig into those moments of tension, the indecision. After that, we get to the dramatic plot twists, the reversals. We'll see what happens when one side really grabs momentum and starts pushing forward. And then finally, we'll talk about how to piece all these signs together wisely. All right, so let's meet the main characters in our little market story. Every great battle needs its opposing sides, and really understanding who they are is the key to everything else. On one side, you have the bulls. These are the buyers. They're full of optimism, and they're always pushing prices higher. And on the other side, you've got the bears. They're the sellers, and they're constantly applying pressure, trying to drive those prices down. The entire story of the market really is just the tug of war between these two. But, not every battle has a clear winner right away. Sometimes the fight just reaches a complete stalemate. And this is a super crucial moment in the story. It's a pause where neither side has control, and it's often a big warning that the plot is about to thicken. A classic signal for this kind of stalemate is what's called the spinning top. This pattern is just pure indecision. It's where the bulls and bears have fought each other to a draw. Neither side can land a knockout punch, and that right there is a clear warning that the current trend might just be running out of gas. The shape of the candle itself tells the whole story. See that tiny little body? That shows you the opening and closing prices were almost exactly the same. But those long shadows, the wicks, they're the key. They represent a fierce battle where both the bulls and the bears made a huge push, but in the end, neither could hold their ground. It's a perfect visual of a standoff. So after a pause, what often comes next is the potential for a major plot twist, the turn. This is where we start seeing bearish reversal patterns. They usually show up after an uptrend, and they signal that, hey, the bears are finally starting to win this fight. One of the very first warning shots the bears will fire is called the hanging man. It's a single candle that pops up at the top of an uptrend, and while it might look pretty harmless, it's a really powerful signal. It shows that sellers are starting to test the bull's resolve, kind of hinting that a reversal could be just around the corner. And here we have two fantastic storytellers. On the left is the hanging man. See that long lower shadow? That shows sellers pushed the price way down before the buyers just barely managed to recover. Then on the right, you have the shooting star, which tells the opposite story. Buyers pushed way up, but the sellers just slammed it right back down. So two different looking candles, but they're sending one powerful message. The bulls are getting tired. Okay, now for some real drama. The bearish engulfing pattern is a super clear and powerful signal. It's like a little two-act play. Act 1 is a nice, happy, bullish green candle. But then in Act 2, this huge bearish red candle opens higher and then closes way lower, completely swallowing the candle before it. The message here is absolutely unmistakable. The bears are back in charge. Seeing it on an actual chart really drives the point home. You can see the uptrend, you can see the buying momentum, and then, bam, that massive red candle just appears out of nowhere, engulfing the one before it. This isn't just a pause, folks. This is a decisive victory for the sellers, and it's a very strong sign that the trend is about to reverse. So if the bearish engulfing pattern was a two-act play, the evening star is like a full three-act tragedy for the bulls. It tells a much more complete story of a market topping out. It starts with strength, it moves into doubt, and it ends with a complete bearish takeover. Let's break down this three-act story real quick. Act 1, a strong green candle. The bulls are clearly in charge. Act 2, a small little candle, kind of like a spinning top, showing that moment of indecision, of doubt creeping in. And then in Act 3, a strong red candle confirms that the bears have taken over. Strength, indecision, reversal. It's a complete narrative in just 3 candles. Okay, so the reversal has happened. The bears have won the battle. But the question is, will they keep control? Well, that's where bearish continuation patterns come in. These patterns basically confirm that the downtrend is still in play, even after a brief pause. A great example of this is the falling free methods pattern. It's this 5-candle formation that looks like a little breather in the middle of a downtrend. What it shows is the bulls attempting a counterattack, but ultimately failing, proving they just don't have the strength to turn things around. The market's just taking a breath before heading lower. So here's how it plays out. The story starts with a long, strong red candle, confirming the downtrend. Then you see these 3 little green candles. That's the bull's weak attempt to fight back. But notice how they can't even get the price back to where it started. And then finally, a 5th powerful red candle shows up, just confirming the sellers are still in charge and the downtrend is about to resume. So we've learned to read the characters, the tension, and the plot twists. But look, reading this story isn't about predicting the future with 100% certainty. It's about understanding the probabilities and making more informed decisions. So what are the key things to remember here? First, these patterns are clues. They're not crystal balls. They reveal what the market is feeling. Second, they're most powerful when they have context, like showing up after a really clear uptrend. And always wait for confirmation from the next candle before you act. And finally, think of these patterns as just one powerful tool in a much larger toolbox. So now you have the building blocks to start decoding the market's narrative for yourself. You can see the struggle, you can identify the turning points, and you can get a real feel for the momentum. The next time you look at a chart, don't just see a bunch of lines and bars. Look for the story.